Okay bro, welcome to the new video. Today we will analyze this company called VICI Properties Incorporated with the stock ticker VICI. And the reason why we will analyze this company is because I've heard that this one is one of the best companies for dividend investing. And as you can see here on the right, the dividend yield of this stock is around 5%. P/E ratio is below 15, which is preferable, and this stock is extremely cheap given the fact that it's an American stock because it's currently trading at $29.58. And as always, we will also take a look at the chart. So unfortunately, we don't have the data for the last 10 years because this stock had an initial public offering in 2017. But still bro, if you would buy this company in October 2017 and then sell it right now, altogether you would have a 58% price return. But if you would buy this stock, let's say each month for the same amount, basically with dollar cost averaging, altogether you will have a 7.5% return. And as always, we will take a look at the most important data from the income statement, balance sheet and cash flow statement, and then we will decide based on that data if we should buy or sell the stock. And we will start with total revenue, and as you can see here, the total revenue is growing since 2017, so that's an amazing sign, and we mark this as a buy. And now we have gross profit. Gross profit is also growing through the whole years, so we will mark that as a buy as well. And now we have the gross profit margin. So gross profit margin should preferably be always more than 40%. And we calculate this by dividing gross profit with total revenue. And here you can see that it started with 87% and right now it's almost 100%. So this is definitely a buy. And now we come to the operating income. Operating income tells you expected income that will become the total revenue. And as you can see here, it's growing through the whole years, so we will mark that as a buy as well. And now we come to the net income. Net income is also steadily growing through the whole years, so this is easily a buy. And now we come to the net income margin, which should preferably be more than 20% through the whole years. And here you can see that it's easily more than 20 because it goes up to 70, and now right now it's around 43, so still we mark that as a definite buy. And capital expenditure divided by net income also seems to be growing a bit and then falling a bit, so we will mark this as a sell. And altogether we can say that income statement is a solid buy, more than solid buy, so that's a good sign already. And now we come to the balance sheet, and in the balance sheet we start by analyzing long-term debt, which preferably should be as low as possible and also growing through the years. And here we can see unfortunately quite the opposite. The long-term debt in 2022 is much higher than in the previous years, so we have to mark this as a sell. And now here we have retained earnings. Retained earnings are basically all of the earnings that company reinvests back into itself instead of paying it as a dividend. And we want to be this growing through the whole years, and here unfortunately it's a bit unstable, because in one year it's low and the other one it's high and so on and so on, so we will mark this as a sell as well. And then total equity is growing through the whole years, especially in 2022, which might explain why the long-term debt in 2022 was so high, because maybe they did some investments, which is a good sign, so we will mark this as a buy. And now we come to return on equity, which is calculated by net income divided by total equity. And preferably you want this to be more than 10%, and right now it's around 7, 5, so we will mark that as a sell, unfortunately. And now we come to total liabilities. They are also quite high and also growing through the years, so we mark that as sell as well. And now we come to debt to equity ratio, which is calculated by dividing total liabilities with total equity. And preferably you want this to be lower than 50. So as you can see here, it was lower than 50 only in 2021, but in all other years it was more than that. But the good thing is that it's slowly going down and down and down, and currently it's around 70%. But still we will mark that as a sell. Altogether, I think we should mark balance sheet as a sell, unfortunately. And now we come to the cash flow statement, and here we analyze only capital expenditure and dividend payments. Basically, capital expenditure means how much money does the company invest in, for example, building new factories, expanding its factories, buying new equipment, buying new machinery, and so on and so on. And here we can see that they don't invest that much into the company itself, except in 2020. So we will mark that as a sell, because when we judge the company, we want to be as harsh as possible. And here you can see the dividend payment. You can see that it's growing a bit and then falling a bit and now growing again. So still we want to be this as high as possible. And right now, as you can see here in 2022, it's much higher than in the other years. So we mark this as a buy. And overall cash flow statement should also be marked as a sell, because we want to be as harsh as possible. And now my final decision is, bro, that I think that this is one of the best companies that I've taken a look at, because you can see here in the income statement is basically perfect. Their gross margin is extremely high. Their net income margin is also extremely high, much higher than those borders, they are much higher than 40% and more than 20%, which is absolutely amazing. And I think that on Monday, when the stock market will open, I think that I will definitely buy this stock, because you can know that I got some dividend payments in this month and I will reinvest them into this company for sure. And also here in cash flow statement, you can see that their dividend yield is right now quite high. So on average, you can get around 40% per stock per year, which is absolutely amazing. So bro, this company is definitely a buy, and I will buy it on Monday for sure. And now you know what to do, bro. Do the hard work and see you on top of the world.